What's going on, everybody? So this is my trade review for Monday, Monday, the 24th of June. First, I want to go into what I was expecting for the day and then my trade itself. So what I was looking at here, if you look at the daily chart, basically we're kind of in this little pullback, right? From making this all-time high on last Thursday. So if you look here, what I was looking at, I had this fair value gap down here, right, from the daily chart. And also, if you look right here, we had equal lows right here, these two wicks. So I was really eyeing the top of this fair value gap because when the market before the open, it was right up around this area. And so if you look at that, I was really eyeing this level here, 762.75 for the day. That doesn't mean that it'll get there, during my session when I trade, but that gives me basically a bias, right? So I have a long-term bias, a bearish long-term bias on the daily chart, coming down for the day because we were up here. So let's see here. Then if I go down, I want to show you really what I was looking at. So here's those equal lows here, right? The top of the daily fair value gap. And if you look, we were about, and I have all my little annotations there, but right here, 9 o'clock. So price was right up in this area. So if I move it like this, and let me go ahead and remove some of this stuff so we can see a little better. I kind of need the other stuff there to show. All right, so basically, let me see if I can zoom in. Here we go. Basically, we look like this. That was 10 o'clock, so we were kind of like that, right? So what I was looking at is we did come down. We had this 1 hour fair value gap, right here, this little 1 hour fair value gap. And then I was looking at these two lows, all right, because these happened overnight. So, and then at the 9 o'clock bar here, it took those lows, right? So since it took these lows, what I'm expecting is I'm expecting price to come down here to that level. But since it took those lows, what I'm expecting, we have this fair value gap, and we also had a nice buy side liquidity up here, which I'll show you in a minute. We also had some buy side liquidity up here. This was really nice, London high. So my analysis was, okay, overall, I'm bearish on the market over the next few days. Today, the next few days, we'll see how soon it gets there. But overall, I'm bearish down to this level. So what could happen is we could see when price takes those lows that I mentioned with this bar, these relatively equal lows, then it could come right back up in, and this is the old daily gap. This line and this dotted line up here is the middle of it. So price could come back up into this gap. There's a 15-minute and a 1 hour fair value gap. Price could come back up into here. And there was some buy side liquidity in here as well. And then maybe it could come all the way back up and take this buy side liquidity before dropping. But really, I was expecting price to come up here, at least to here, before dropping. So I have a choice, right? Let me jump down to the 15-minute here to show. Okay, so I have a choice. My choice is a decision to make. Basically, I can look for a long when price gets down in this area. If I get a setup to take me up here, because if you look, I mean, that's a good, say around 920 is this low down here. 19,920 all the way up in here. 980 to 990. I mean, that's a great for me anyways, a lot of room to make a good trade, really good trade to go up to that area. And then that's where I expect the long-term bias, either here to look for a short down to there, or take this high right here, this buy side liquidity, and then look for it to run down. Okay, as you can see, it came up here and then looked further and then went ahead and ran down. So pre-trade, if you look here, we had before this. So looking back here, we had the 830 opening price, and then right here we had, this is the London low. But if you look, we have some nice, we have some buy side liquidity right here, some relatively equal highs, and then in a 1 hour fair value gap, and then also a 15-minute fair value gap right there. Okay, so I'm highly expecting price to come up here. So if I get an entry to go long down here, I could take it up there. If there's no entry to go long down here, then what happens is I wait and wait. Once it gets in this area, then I start looking for a short. That's it. That was my logic and my thinking for today. As you can see, well, let's see. Let me drop down to the 5-minute real quick. And I'm going to go over my trade in just a second. I just wanted to show the framework. Okay. And then let me go to regular trading hours here. I'm going to have to. So if you look, we had an opening range gap right here from this is what we call the opening range gap. So I measure the gap and then the middle. Okay. And typically I expect it to at least come to the middle, the consequent encroachment, before it makes its drop. And sometimes a lot of times, it'll go ahead and go all the way up and fill the gap completely. Okay. So I was already expecting this area as an area for it to go up into and then go short. And it just so happens that is extra confirmation that there's an opening range gap there. It lines up. So I'm waiting for it to get up there. Okay. And like I said, if there's an entry there, then great. So I'm going to go over my trade, and I'll go over it, but it wasn't exactly what I wanted. And I was a little bit, here, let me just go into it. That's the framework for the trade. Okay. So let me go into the actual trade. Let me pull the video down here. Okay. So here's the recording of my trade. Okay. And what we have here is this rundown. This is what we call the manipulation here. Okay. And then it comes up. Let me play. What happens is it comes up and it leaves this little fair value gap right here. This is the 2-minute chart. So I left this fair value gap. It took this swing, right? So it took this swing right there and left this fair value gap. So beautiful. If it comes back down into here, I'll go long and take it right up at least to the middle of the gap. If not, close the gap. That was what I wanted. Okay. So here we took it. And also what I was looking at is we have this inversion fair value gap because it came down, went into it, manipulated down, came back through. So it very well could hit this. Also, right here was that swing. So this is kind of a mitigation here. You know, mitigation. If it goes up, comes right back to it. Mitigation, inversion fair value gap. This could be a very good entry right here. But if I measure this dealing range, the equilibrium was actually a little bit higher. So this wasn't really in the discount of this dealing range. So I was really waiting for it to come down to this fair value gap, and it just didn't do that. Okay. So you'll see right here, it'll come down and it'll tag it. So I measure this little dealing range here. But technically I could have measured this one, and then even then it would be not in the discount. So it comes down and you'll see it just tag it right there and just pop up and go. And I was like, ugh. And so let me fast forward it real quick. Up there it was. Right here. Boom, hits it. Does a little pop up. And then from there, it just goes. This would have been a great entry. But also, I might add, I'm not taking inversion fair value gap entries. I'm looking for the entry when it comes back down to the fair value gap. So, and I know that's a good entry. I haven't been taking them off of those. So then it goes, and let me fast forward here. And when it pulls up, okay, like I said, I'm expecting price really to come up here to close the opening range gap and then go into that 15-minute fair value gap and 1 hour fair value gap. Okay, so that's what I was expecting. So since I missed this, I'm thinking in my head, if I get an opportunity to take a lower risk entry off of a PD array, then I may do that. Which in all reality, I probably should have not and just waited to get into that area that I mentioned I would look for a short from and just wait for the short. That's probably what I really should have done. But I didn't. So let's just fast forward this here. So it pops up, hits the middle consequent encroachment of the opening range gap here. There's the 830 opening price. And as you know, you have the 830 opening price, then you have an open, low, and then high. So it didn't close up, it ran down, but that's kind of what I'm looking for. If we opened and went low, then I would definitely look to take a long on the other side of that. But let's fast forward here again. So we get this gap, this fair value gap here. And at this point, I'm thinking, all right, we're so close to opening range gap here. And that's where I'll show the 15-minute fair value gap in a second, which overlaps this. And I'm thinking it got so close. If it leaves this fair value gap right here, there's no way it's coming back down here and then going up. It's going to come into this one. And if this one holds here, if we get if it comes back into this, if it creates this fair value gap and comes back into it, I'm just going to go ahead and enter here and take it right there. And then I'll have a smaller risk. And I'll explain that in a second once this happens. So there's 12, 10, 11 seconds here before this fair value gap forms. So I'm just going to let it play out here. So you could say, yeah, technically it took this buy side liquidity right here already, but it's this close to the gap in that 15-minute fair value gap. It's just going to go in there. So I tell myself, if we come down into this fair value gap that we just created, I'm going to enter it long. And I'm going to take profit right up here, which that's still like 35 points. So, and I'll explain once I'm in the trade. Give it a second here. Because it comes right down into it. I just don't want to hit the fast forward, and I guess I can, and I'll just rewind it. Okay, there it is. So it pops down into this gap right here. I go ahead and I enter long. And let me fast forward it. I go ahead and mark the gap there so I can see it. And then, let's see, I show the fair value gap there. So here's what I do. I'm taking profit right here, right below the middle of that fair value gap, the 15-minute one. But more than likely, I'm thinking this should close this gap right here. It should close it. And once it does that, then I would be looking for this to go short. My stop, this bar right here is the one that created the low of the fair value gap. So I put my stop at the low of that bar. That's not where I'm going to exit my trade. I'm not going to let, if this comes down, I'm not going to let my stop get hit because I don't want to risk 30 points on this or whatever, that 32, 33. It's basically Almost a 1-to-1 trade here, but I'm not going to let it come all the way down here. So what happens is when you take this is technically should be a lower risk entry. So what I'm looking at is if price does come below this fair value gap, it can wick below, but as soon as it closes below this gap, I'm out. Or it can, wick down and close, then I'll put my stop, like let's say it wicks down and kind of comes up and closes, then I'll put my stop right at the low of that bar. And if it goes any further, I'm out. So really, I would have been out of this somewhere not much lower than this fair value gap. So my risk would be lower. And then I'm taking it right up here. So I'm in it. As you can see, it pops right in here. Where I did get filled was pretty much the top of it, even though, it came right down to the middle of the gap. And that's the thing about marketing in, right? You never know exactly where you're going to get in, but with these trades, you don't need to get in at an exact point. So here, I'm just really waiting. I'm watching to see if we're going to close below this. And see, I'm measuring out everything because I want to keep this a low risk entry. Let me fast forward it here 30 seconds. And as you can see, it never quite goes back down. It did test this 830 opening. Pops up. It's my target. It's the middle of the fair value gap. And then it does pop right through that opening range gap. So it did exactly what I wanted. In hindsight, I probably shouldn't have taken this trade. It's not really my model. Typically, if I miss down here, and this is not even my entry model. So really, I should have let this come up here. And then, as you saw on the chart that I just showed, look for the short after it comes up here, because it's still early. Look for the short to come down and run through. And that would have been the higher probability trade and probably the better one, because technically I did not really have an exact entry here. So it is what it is. I mean, there was nothing really wrong with it, but it's not really how I want to take my trades. And let's see, this is the 5 minute, and this is where price came up, and then price came down. And you can see right here, as it came down, it left this gap, this fair value gap, right there. Actually, let me mark this 5 minute here. This bar was 1025, so it's not even, it's 20 minutes, 25. 15, 20 minutes after I exited. Ran down. There was no real swing that it took, but it ran down, pulled up into this fair value gap, and then went further down. But you can also drop down into, let's say, the 2 minute and look and see if there was an entry. Because my entries, I take them on the 1, 2, 3, 4, or 5 minute chart. And sure enough, we have a swing. Let's see. We don't really have an entry. As it came down, it took this swing. Pretty much have a gap here as well. Yeah, nothing real clean in the morning, so I probably wouldn't have even taken anything. Let's go down to the 1 minute real quick and see if there's a entry on the 1 minute. Okay, there was an entry there. So you have this. Well, we pretty much have this swing here. It's not the best one, but it did take that swing. Didn't leave a fair value gap, but then you have this swing down here, and it took that swing, inverted that fair value gap, but let's just go ahead and remove it for illustrative purposes, and then it left this one right there. Okay, so it took the swing here, So this is a market structure shift. Left the fair value gap, ran down a little lower. Could have entered here. Multiple times you could have entered. Here's a little order block right here as well. See, it came up and then gapped down. So this is an order block. So right here would have been a great entry. Anywhere in here, 962 area, somewhere in that area. And then you very well could have just ran it right down there. So let me see. Let me measure out this move. Yeah, that could have been the first PD array on the other side. And I mean, shoot, this is 964. And if you take it down anywhere in this area, I mean, you're getting at least 50 points. Just this, if you're not going to hold it any further. So, yeah, that would have been a great move here in that area. And anyways, that's it. That was the trade for me today. I just wanted to also show mainly that this was beautiful framework for the day. Very clear on where price was going for the day. And it played out, I mean, just the way it should. So, oh, you know what? That's why things were messed up, not looking right. I still had it on regular trading hours. No wonder. No wonder. So let me go back. I bet you there's an entry, a better entry. Yeah. See, you took this swing, you had this gap, price pulled up in there, then it ran down. So yeah, could have waited, but hey, it is what it is. And that's my trade for today. But like I said, the framework was there and it was absolutely beautiful framework. Beautiful. Right here, ran up into that gap, ran down to the level that I had right here that I expected. And there we go. So, all right. Hope you have a great day and trade well, everybody.